Well, g'day there traders and friends, market participants right around the world. You are here with James on behalf of Pivot Point Trading as I sit down and bring you this very quick Thursday afternoon market recap. 2 points which I'm going to address in this afternoon's market video. First of all, there's going to be divergence, once again setting up on all three of the US financial markets since, again, mid to late March 2016. And the second piece of analysis, which I'll speak about, is the gap fill, which is taking place on the Nasdaq. Very interesting as we push back up and almost hit that 5,000 psychological round number. But first of all, let's quickly speak about divergence. Obviously, this week in the markets, we've seen again another little bullish rise to the upside. We have broken above the late March, early April 2016 highs. You can see the S&P 500 coming in with that declining bearish trend line. Interesting candlestick today. Again, that doji spinning top candle. Be interesting to see, first of all, what the continuation or, of course, the reversal signal, which happens during Friday's trading session. I'll be paying very close attention to how this candlestick develops. But again, going back to the subject of divergence, have a look at this. If I bring up again the oscillating indicators, have a look at the MACD, the RSI, and the stochastics. Given, of course, the bounce which we've seen take place on Tuesday and Wednesday, ask yourself the question, price is breaking out again to a relative higher high, albeit on a daily type of chart within a month's type of time frame. But have a look at what's taking place on the stochastics. What is the slope of this signal right here? What is the slope again of the RSI? Are we making higher highs on the RSI and the stochastics, or are we making lower highs on the oscillators themselves? Have a look at the MACD. Again, we've got that cross at the beginning of April. Again, notwithstanding this bullish two-day bounce which we saw on Tuesday and Wednesday, is the MACD again showing divergence? And the answer to this question is yes on all three of these oscillating indicators, as price is broken out again to a short-term higher high. As we come back up and backtest this declining primary trend line, again, we are seeing the establishment of bearish divergence. This is alerting us that, look, this false breakout, again, is going to end in disaster who are buying this little breakout, or what appears to be a short-term breakout above the late March, early April highs. Going back to the Nasdaq again, ask yourself the question, are we seeing divergence develop? As the Nasdaq is pushed on up above again its late March, early April 2016 high, are we seeing divergence on these oscillating indicators? Have a look at the RSI, look at that slope right there. And the MACD, we got that cross, the bearish cross, early April. It looks to be again signaling a bullish cross, but this is again just some form of a short-term stagnation moving sideways before ultimately we see the rejection up at these levels. Now, continuing on from, I guess, the subject of divergence, have a look at the Nasdaq. I'm going to take the oscillators off the screen. And again, going back to a video I put out probably 2 or 3 videos ago, it was over the weekend just past. It was about a 45-minute analysis class on the state, or at least the technical snapshot of the US financial markets. If you pay attention to the Nasdaq right now, we spoke about the trump card for the bulls and a logical area as to where this last little gasp will probably fizzle out and fade. And I was speaking about this red rectangular box which I've had on my screen since the beginning of 2016, and how it has continued to act as a magnet, a long-term magnet, for again price to come back up and close. According to the Japanese candlestick, or at least open window theory, generally what happens is that when we see gaps or large gaps on indices, even individual stocks or ETFs, above 90% of the time, again, these gaps will be tried to close, or at least they will be closed. And as you can see on the Nasdaq, I went into detail over the weekend, but I spoke about this continuation pattern right here and how we weren't seeing any follow through to the upside. Now, this was going back to Thursday and Friday's trading session last week, and we were working with this little picture right here. Well, as you can see, it looked as though we were starting to break below this on Tuesday, but again on Wednesday, we saw this gap and a continuation to the upside. Again, notwithstanding today's candlestick being another doji, which we've seen show up over and over again as the market has continued to push on up higher, it looks as though we are ultimately going to see this gap close. Now, again, last week or over the weekend in that analysis class, I wasn't entirely sure if it was going to happen. There was a high probability once again that it was, but given the candlestick formations, we were again looking for this market to reverse. However, this week, as at the close on Thursday, we only have another 55 points on the Nasdaq until the gap which began 2016. So as you can see, the first trading session where we got that major gap down which kick-started this major waterfall sell-off, it looks as though we're going to close. So pay attention, look for a shooting star type of candle. Just look for an upper wick which is probably going to develop up around this 5,000 area. There is a gap, again, a very small gap above this 5,000 target, but it's not as major, it's not as pronounced as this 2016 gap. Again, we are still negative on the Nasdaq year to date, and it's something to pay attention to. If you see the reversals up and around this 5,000 figure, On the Nasdaq, again, the gap fill would have run its course, and then again, we'll see if we want to see, or we'll see first of all if there will be candlesticks, and of course that reversal setting up once again the next macro lower high on the Nasdaq. So pay attention to that. The S&P 500, just to recap, it has had a relatively bullish week again. On Tuesday and Wednesday, seeing that follow through, up 35 points. Again, we were speaking about the tweezer top coming close to the declining primary bearish trend line. We still haven't broken above it. And again, on Thursday, we've respected it with that spinning top doji. So again, very critical time looking at the markets based on where we are currently trading on the technical chart, right? Very, very important. The Dow Jones Industrial Average has broken above that swing high again. I didn't do the divergence on the Dow Jones Industrial Average, but have a look at this. The RSI is sloping. We've got 3 lower highs, right? Multiple peaks of negative divergence. The stochastics again is sloping down. It looks as though we're getting a short-term bullish cross. That isn't a strong buy sell signal. You want to see it take place down the bottom. That is where these true signals take place. And again, the MACD is sort of stagnating here. It's looking to give us a false bullish cross up the top, but again, it's showing once again divergence showing up with this lower high over here. So something to think about again, as a lot of people are getting carried away with the bullish upside momentum, which has really just flown in, or at least stemmed into the market, seeing that net positive move really take place on Wednesday. Wednesday's candle was when we broke above these little swing highs, but we still have some major overhead resistance to break above and to overcome in terms of this market breaking out to new all-time highs, right? At least the highs which we've established in 2015. We still have a very long way to go. And on top of that, again, we are so overbought on this market. We have been overbought for over a month right now, and these divergent signals are cautionary signals saying, look, be very careful because again, momentum is exhausting itself right now. And what's interesting to note is that on these gaps, or on some of these most recent gaps, if you go to the Nasdaq, we may look back and say, well, these were the final exhaustion gaps. Once we fill again this open window, and if we see the reversal signals take place, that is probably going to be once again the top on this right shoulder of this topping pattern, which we've seen set up on these markets since 2014, really the structural patterns going back to November 2014. It's a very interesting time right now in the financial markets. Pay attention to the resistance levels. Keep a level head and a level analysis on these markets, but most importantly, pay attention to divergence, because divergence, again, a lot of people don't understand it. They don't really pay too much attention to divergence, but they are very important signals, and most of the time they play out, okay? And again, it makes sense given that we're seeing the back test and the backfill of these open gaps, which have been open since the beginning of 2016. So have a fantastic Thursday evening. I look forward to Friday's trading to see what candlestick develops. But again, wouldn't surprise me to see the Nasdaq pushing up, fill this gap, and then see, of course, this major reversal, which I've been looking for since the lows down here in mid to early February 2016. I believe that we are at the end of this dead cat bounce, and we are going to see again topping and reversal patterns up and around these areas. It's just a matter of time until reality sets in. All the best, everyone, right around the world. It's James signing off on behalf of Pivot Point Trading. Goodbye.